However, I do like to start off the show with kind of just a breakdown on what I saw happening for the week in the stock market this week. And I do a video every day, Monday through Thursday, on what I saw happening that day. And then this is sort of a summary for what happened for the week. So let's take a look at kind of the overall chart, which we've been looking at here for quite some time. This goes back to 2018. And you can see the market is really, had a big drop in the pandemic and what have you. But the most recent motion that was right above us here has been pretty consistently up, not bad at all as far as that goes. So today is very interesting. We are right on the edge of the all-time high. The all-time high close for the S&P 500 is 6,118, and we're right in there. So we'll see if we can make it today for another all-time high close. I mean, last year it happened, I think, 57, 58 times, It was kind of fun. The record is 70-something, which was set back in 1995. Hard to beat that one, especially, we have a lot of things happening right now. And so let's take a look at some of the things that happened this week, just in terms of reports. So, and issues. So one of the big things that happened first, was that we were told that on Monday we're going to have tariffs for 25% on aluminum and steel. So Monday rolls around, and actually the tariffs are starting March 4th, and this has been an ongoing thing. So if you go back a couple of weeks, February 1st, that Saturday was supposed to be, we're going to have tariffs on China at 10%, Mexico at 25%, and Canada at 25%. And then Monday rolls around, and the market's down like 2%, and all of a sudden we're actually not going to have tariffs on Saturday. We're going to have them on the 4th, on Tuesday. This is last week. And so one of the things that we're kind of seeing here is that I think that they're kind of announced, and then there's a deadline that's later, and that gives a period of time for negotiation. I think that's what we're trying to get to here.
Yeah, it's kind of like the boy who screamed wolf, right? You
Yeah.
scream wolf, tariffs enough, people will start to ignore it until there's actual action.
That seems to be very true this week, especially, right? So we've only had a couple of weeks of this, and already people are starting to kind of catch on. Now, the tariffs from China are still there, the 10%. It's a little vague. I looked into this and I still can't figure out, is it blanket across the board? Is it certain, products and such too? So we'll find out some more about that at some point in time. But this week, the tariffs again, are pushed off till March 4th for aluminum and steel. And then the other thing, didn't change. Changed here, didn't change there. But we'll be right back. This little technical thing, try to figure out here, just get these charts to work. There we go, we're back. Sorry for the delay. Sometimes the button system that we have to kind of change, it's a very sophisticated setup actually, but it doesn't always work. Sometimes it disconnects. We practice, before the show, make sure it's working, and then somehow it doesn't. So this is a chart showing like the total, imports coming into the U.S. And then, you can see how small really iron, steel, manufactured metals, non-ferrous metals are. So we're going to put a 25% tariff. That was what's coming at us at the beginning of this week. And the market was actually up pretty much right away on Monday. Didn't really bite on this one, even more so after we heard that the tariffs weren't coming until March 4th at the earliest. So, we'll see what happens in that regards. So there was a lot of, kind of scary press about this because it definitely hurts certain industries. I know the Ford CEO came out pretty against this and talked about how much it would impact the automobile industry and what have you. So, because 25% tariffs, that's pretty high. I mean,
especially when you're using that as an input.
Yeah, exactly. And so, we'll see how that works and see what they do. But again, the market was up on Monday after this was announced, and again, up even more after it was delayed. So kind of interesting. The other tariff piece that happened this week, we were told on that Thursday we were going to have reciprocal tariffs. Okay, so that means that like if we have a 2.5% tariff on incoming European cars, and they have a 10% tariff on incoming U.S. cars, that we would move our tariff up to 10% to match what they have, right? And so again, the market was waffling a little bit on Thursday until we actually found out that it wasn't going to actually start until sometime in April. So again, that seems to be the ongoing pattern. Gives these countries a chance to come over and say, hey, let's negotiate and what have you. And so, will we ever have actual tariffs? Yeah, well, we seem to have some on China that were, kept so far. How long will they last? Are they temporary? Is there still negotiations going on behind the scenes that might get rid of them? The tariffs that were put in 2018 are essentially still here.
Mm-hmm.
They were re-upped for the most part by the Biden administration in May of last year. So, you know, and it hasn't been the end of the world. Obviously, we're almost at an all-time high in the stock market today, even with those tariffs still dragging on prices in the economy and what have you. So, I think one of the things we have to be really careful about here with tariffs, especially, or really any of these scary things, we actually don't know what the impact's going to be, right? We don't know if they're going to do them. We don't know if they're temporary. We don't know if they're long term. And if they are long term, we're not sure what the impact actually is going to be. Is it going to be enough impact so that the Federal Reserve starts raising interest rates and starts to hamper the growth of the market? We don't know all of those things, and so we got to go with the market. You can't really, and this has been our process from the beginning. You can't guess, you can't project what's going to happen, and then try to make moves around that, because we've got markets that are running right now, and so if you're not in there, you're not making that money, and so you got to give the possibilities for almost anything can happen, right? The market could go skyrocketing here. I mean, one of the things about where the market is right now, we have been bumping up against this same level ish, right? A lot. And if you look closely at the charts, the bump has been on the upside of that range and not so much on the downside.
Yeah.
To me, that usually means we're going to break through. And I actually really think we are going to break through. And one of these times we'll break through and really go. We broke through a couple times before and kind of fell back down pretty quickly. But the market is showing strength. There is interest in buying in the market. And the market's coming in. And so I think like what we're seeing maybe today and yesterday, where I saw some, good strength, that seems a little surprising to me, faced with all the other things that are happening this week, which we'll talk about some of those other ones, is that today we're kind of being announced the House has a tax package, right? I read everything I could to try to figure out like what taxes they're going to cut. The only thing that seems to be clear is that they want to continue the 2017 tax tables.
Yep.
I've read 10 years, so not infinitely, but for 10 years. That's actually a big deal. If we go back to, if everything sunsets that was put into place in 2017, the average household has a 22% increase in their taxes, which is literally one of the highest tax increases in the history of this scenario. So, that part's there, that's expensive, but are they doing corporate tax? I've seen some, projections, they go from 20 to 21 to 20, or they go from 21 to 15, right? So that's probably the biggest one that the stock market will be concerned with.
Yeah. We'll see how they can pay for the tax cuts too. Which will be very important.
What's in the package right now is it's just, they didn't specifically pick out the tax cuts, because this is just coming out of the committee, so it has to get through the House still, and of course the Senate has to deal with it. And the Senate has their own bill in progress that actually doesn't have any tax cuts in it. Those are going to run into each other, so this will be a little bit of a work in progress. But right now, in the article I read, there was an $880 billion projected cut to Medicaid over a 10-year period, and so Medicaid is now a really complicated animal, and the Affordable Care Act, also known as the Obamacare, has become entwined with Medicaid, and there's an awful lot of red state recipients, citizens that are in the Medicaid system. Matter of fact, Steve Bannon came out and said, "Be careful with this, because there's a lot of MAGAers that are using Medicaid." So we'll see. That's the problem. What's really important here for a tax cut is especially important for the bond market, which is you have to have cuts that would equal, over a 10-year period, the reduction in revenue that could come, or the bond market's going to end up with a much higher, deficit to fund, which then stretches out the bond market and such too. So, yeah, we'll see how that goes through. That came out of committee. I think it was a 21-16 vote, for whatever that means. But we have a very thin majority there in, the House.
I think it's 218 to 215.
Yeah. So are there 3 or 4 people that don't want to see those kind of cuts to Medicaid? Do they find cuts in other places? There's been a lot of stuff flying around. I mean, Trump mentioned about cutting the defense spending in half, and all the defense stocks dropped this
Hmm.
week. So, it's all up in the air right now. There's no, this is just kind of the like watching sausage being made. I guess there's some analogy there. Sometimes you don't want to see the
Yeah,
mess that
we'll have
happens.
till March when I think March 20th or something. 21st is when the budget runs out.
Yes, exactly right. So they're moving along. We'll see. But anyway, that honestly, I think that is why the market's moving, though. That
Hmm.
tax package coming out, even in its preliminary form, is kind of exciting the market. We saw this in 2017. As these tax proposals came up, the market started to move, and we had quite a good run out of the signing of that tax package. Now, I'm not saying tax package is great. I'm not saying that I like it or any of those types of things. Doesn't matter. I'm just talking about what it means to the stock market. And the stock market loves reduction in taxes. The bond market doesn't mind reduction in taxes as long as there's identified spending cuts so it's not going to look like a massive deficit increase.
Yeah, as long as you don't balloon the deficit, bond market's happy.
Right, right. And unfortunately, I think in the rearview mirror, when we look back at 2017, they said that was reconciled. In other words, they were balancing out. But our deficit has grown pretty dramatically
That
under
and
both administrations.
Yeah,
Yeah,
that and the pandemic
yeah,
spending
yeah, exactly.
kind of ballooned the deficit.
All right, so here's another thing that came out today on Wednesday was the Consumer Price Index. So if you look at this is a 3-year chart. You can see kind of right over my head, there's a bottoming point, right?
Hmm.
And it's been kind of coming up. I mean, it's at 3% year over year. So this is looking at January of 2025 versus January 2024, and we're at 3%. Now, again, CPI is not what the Federal Reserve looks at. It is not the thing that they're trying to get to 2%. And this is the overall CPI. And a chunk of that motion upward is the increased cost of energy. But it's going in the wrong direction. I mean, overall, it's down over that 3-year period. But we've had a good 8 months here where we've had kind of slowly rising inflation. I think this is a really big problem for the Trump administration and some of the things they're trying to do. Because the last time we did tariffs in 2018, we didn't have high inflation. Matter of fact, I think core CPI was below 2% at that
Hmm.
time frame. And so, we've got this issue of, we're in at least a quasi-inflationary environment where inflation is moving up at least a small amount on almost all of the measures. And we've got a scenario where we're trying to do some inflationary things potentially.
Hmm.
I don't know if it'll be inflationary or not, but tariffs could be. Massive deportations of illegal immigrants who work in the agriculture and housing industry, housing construction industry, could be inflationary for those two categories. So that it's a different tightrope that they're trying to walk here. So if they just threaten tariffs, okay. That won't matter. The market will be fine with that. It'll
Hmm.
ignore it, just like you said. If, on the other hand, let's say these mass deportations are really effective, that could be a problem. But if they're not that effective, I just saw an article today saying that for the first month of the year, they had 25,000 deportations. It's actually running at a slower pace than Biden was doing. So, we'll see how it works and what really happens and what is impacted. There's a lot of articles about farmers because farmers are getting hit from all sides.
Hmm.
They cut off U.S. aid. Farmers sell $2 billion worth of food to U.S. aid that gets distributed around the globe. They cut off the infrastructure, the IRA. I forgot what that stands for, Inflation Reduction Act, but I call it the infrastructure bill. So these farmers were putting in big solar panel arrays, and they have to put the money up front, and then they get reimbursed for part of it or half of it or what have you. And so they were out the money and not getting reimbursed because that's all been frozen. Maybe they unfreeze that. And then you've got all these stories where they'll have a little raid in a particular area of the country, and then all of the farm workers won't show up to work on the crops in that area. So they're the farmers are getting, and they're as a group, they're Trump voters. So what happens there? How does that get reconciled? In the last, situation, China had a retaliatory tariffs against like soybeans, and
Hmm.
so all these Midwestern farmers that were selling soybeans into China were struggling, and so they took some of the tariff money and they actually put it into subsidies for the farmers. And so, we'll see what happens there. But here's another measure that came out on Thursday, and this is the Producers Price Index, and you can see pretty clearly, and so this is a wholesale inflation. Inflation happens before the retail consumer gets there. And you can see pretty clearly that it's slowly growing. It's not going the right direction. So this is where the market's a little concerned. But the market was up on Thursday, 1%, 1.04% actually on the S&P 500. And so in the face of all of these different data points, the market's moving up, and it's because of this. In my opinion, it's because of this bill that is being worked on in Congress to lower taxes, and the fact that there's one that's out. Whether it becomes the one or not, we'll see. And then this came out today. This is consumer sales, retail sales. And so it's actually down 0.9% over the last month. And so you can see we had 4 good months there of good growth, heading into the end of the year. And it's down. The very first bar on there is actually also a January timeframe. So January can be bigger. People have spent a lot of money during Christmas, right? And so they don't spend as much money in January. And then you get these weather impacts that happen also. So, we'll see how that plays out. But the retail sales aspect has been the driving force, honestly, since this whole pandemic started, as far as that goes. So, when we look at the overall totality of things, there's some pieces that are kind of creaking underneath in terms of, what's happening with inflation and retail sales and such. The market is, struggling with the concepts of tariffs, but really quickly here in just 2 weeks has started to kind of ignore, what is happening there, because it's one thing to say, because basically the process that they're using is weird. They say we're going to announce these tariffs on Thursday, and then Thursday comes and say, okay, these are going to start sometime in April. That's what happened yesterday. So, after a while, nobody's going to listen, and we'll have to wait and see what happens as far as that goes. But that's kind of what's going on. It's been really interesting to see. And here goes the stock market. Is it at an all-time high still? Is it up there? Came off a little.
It's 6,115 now.
Well, at 115. So we need to get to over 118 to get. I don't know. Maybe we're in the last half hour. Probably pretty close.
Yeah.
We'll see what happens. Okay. So anyway, that's the summary for the week. It's been a good week to be an investor. I still think the stock market is ready to break out. If it does break out and finally really break out, it'll go. It'll jump, not a lot, 3, 4, 5%. It'll move. And then you'll have this tremendous support right around the 6,100 level on the S&P 500, because we've spent working on 10 weeks-ish, kind of in that same neighborhood, and building up a really big number of shares that are trading in this same spot. So I think that will be a great thing as far as that goes. Anything can happen. All these different things that are out there are pretty interesting. But anyway, that's where we're at right now. So thank you for joining us for the summary. And